The real silver story isn't the price. It's this new Texas mint. Have you ever considered that the loudest signal of a market's peak might actually be the quiet construction of its future foundation? We have just witnessed silver prices touch a spectacular, headline-grabbing new high in nominal dollars, a moment that has both electrified and terrified investors. Yet the truly pivotal story isn't unfolding on the trading screens of the COMEX. It's happening in a state-of-the-art facility outside Dallas, Texas, where a major refinery has just unveiled a new mint. This development is far more than a simple response to demand. It is the first tangible move in the complete recalibration of the modern silver market, a market that has been stretched to its breaking point. The core problem, the friction that has been grating on investors for months, is a profound disconnect between the paper price of silver and the physical reality. In 2025, we have seen the market upended. Stackers, the long-term believers in silver's value, have been whipsawed by volatility. They celebrated the ascent to record nominal highs, with prices briefly touching and even surpassing the $50 mark, only to be met with a harsh reality when they approached the market. The retail experience became a paradox of scarcity and glut, a complex inefficiency that baffled even seasoned participants and threatened to break the chain of trust that underpins the entire physical bullion trade. This market dysfunction manifested in several critical ways, creating a landscape of frustration for the average investor. On one hand, surging demand for investment-grade products kept premiums stubbornly high. On the other, a wave of profit-taking and selling from long-term holders looking to capitalize on the new price highs overwhelmed the very system designed to absorb it. Local coin shops and even major refineries began to turn away sellers, unable to process the sheer volume of incoming constitutional silver, silverware, and even pure bullion. This created an alarmingly wide bid-ask spread where the price to buy was stratospheric, but the price offered to sell was disappointingly low, a clear signal of a market under extreme stress. This environment presented not just a problem for individual investors, but a systemic risk, and a massive opportunity for an agile, forward-thinking player. The market was screaming for a solution to a logistical bottleneck. The inability to efficiently take in impure silver, refine it, and remint it into the products that new investors were demanding was the core of the crisis. It was a failure of infrastructure to keep pace with market psychology. This inefficiency created an opportunity for a company with the capital, expertise, and vision to vertically integrate the process, to build a bridge over this chasm between raw supply and refined demand, and in doing so, capture a commanding position in the new silver landscape. The catalyst for change, the innovation that directly addresses this market failure, is the launch of a new highly advanced minting facility by Dillon Gage, one of North America's most respected and established precious metals refiners. This is not merely the opening of another workshop stamping out coins. It represents a strategic masterstroke, a purpose-built solution designed for the specific challenges of the 2025 silver market. Situated near Dallas, this mint is a turnkey operation, a seamless conduit from raw, impure metal to investment-grade bullion bars, engineered from the ground up for speed, efficiency, and above all, agility in the face of unprecedented market flux. This facility's design philosophy is a direct reflection of the market's recent pain points. Technicians at the Dallas Mint take in a diverse array of silver-bearing material, from classic 90% constitutional coinage to industrial scrap, and immediately subject it to a rigorous refining process. The material is melted down, impurities are systematically removed, and the resulting pure liquid metal is quenched to create silver grain. This grain then becomes the feedstock for the minting operation. This integration of refining and minting under one roof eliminates the logistical delays and counterparty risks that have plagued the industry, creating a far more resilient and responsive supply chain. The technological sophistication of the Dallas Mint is central to its strategic importance. The process is heavily automated, with robotic arms feeding the purified silver grain into molds, which are then passed through ovens heated to approximately 1,200 degrees Celsius. This ensures a smooth, consistent flow to form the bars that are in such high demand. This automation is not just about cost saving, It is about scalability and speed. As investor orders surge, the mint can ramp up production with a velocity that traditional, more fragmented operations simply cannot match. It is a system built not for the silver market of yesterday, but for the volatile, high-volume market of tomorrow. The tipping point we are witnessing is the moment when market infrastructure finally begins to catch up with market demand. The launch of the Dillon Gage mint signifies an irreversible shift from a market defined by its bottlenecks to one defined by its capacity. For months, the narrative was controlled by supply constraints and logistical hurdles, which led to exploding premiums and market dislocations. This new facility, by its very existence, introduces a powerful stabilizing force. It sends a clear signal that the industry is adapting, investing, and building the infrastructure required to support a higher volume, higher-priced silver market for the long term. The change becomes permanent when this new capacity begins to absorb market volatility, smoothing out the very inefficiencies that have caused so much recent turmoil. The immediate impact of this development will be felt most acutely in the retail market. Investors can expect to see a significant compression of the bid-ask spread. As this facility efficiently converts the glut of scrap and constitutional silver into new bullion, the downward pressure on sell prices will ease, while the increased supply of fresh bars will help moderate the premiums on the buy side. This brings liquidity and fairness back to the market. For the average person, this means the price they see on a screen will more closely reflect the price they can actually transact at, whether they are buying or selling, restoring a crucial layer of trust. In the aftermath, we are likely to enter a period of market stabilization, which some might perceive as boring following the recent fireworks. The wild premium spikes and supply shocks that define the run-up are less likely to occur with this new, agile capacity acting as a shock absorber. This is not a bearish development. Rather, it is the hallmark of a maturing market. This stability will likely establish a new, higher floor for silver prices. The market has now proven it can handle significant volume at these elevated levels, and the infrastructure is being built to sustain it, which should provide a new baseline of confidence for long-term investors. Looking further ahead, the implications of this expansion are profound. This move by a major industry cornerstone like Dillon Gage, a company with nearly 50 years of experience, is a powerful vote of confidence in the long-term future of physical silver. They would not undertake such a significant capital expenditure without extensive market analysis, indicating sustained demand for years to come. This isn't a speculative gamble on a short-term price spike. It is a strategic investment in the infrastructure needed for a world where tangible assets play an increasingly critical role in wealth preservation amidst ongoing inflation and global uncertainty. This development also subtly challenges the bearish sentiment expressed by some financial institutions. While analysts at J.P. Morgan, for instance, have warned of slowing global demand for industrial metals like copper and aluminum, they may be underestimating silver's unique dual identity. Silver is not just an industrial commodity, it is a monetary asset with thousands of years of history. The demand driving the need for this new mint is overwhelmingly investment-driven, a flight to safety that is often countercyclical to industrial trends. This facility is being built to serve the safe haven buyer, a demographic that is growing more concerned about currency debasement and geopolitical risk, not less. The establishment of this mint can be viewed as a crucial piece of enabling infrastructure for the burgeoning movement toward recognizing precious metals as legal tender. As various states across the nation take legislative steps to treat gold and silver as money, free from capital gains taxes and usable for transactions, the need for a reliable, high-volume supply of refined bullion becomes paramount. This Texas-based facility is perfectly positioned, both geographically and strategically, to support this trend, providing the physical metal necessary to turn these legislative initiatives into a practical, economic reality for citizens. It's a foundational element for a parallel monetary system. Moreover, the agility of this operation introduces a new dynamic for investors to consider. The ability to rapidly refine and remint silver means that the market can adapt more quickly to shifts in consumer preference. For example, if demand for 1-ounce rounds wanes and demand for 100-ounce bars surges, a facility like this can pivot its production almost instantly. This flexibility reduces the risk of specific product shortages and the associated premium spikes, leading to a more efficient market overall. It allows capital to flow to where demand is highest, without the friction that has characterized the market in the past. For the individual investor, the strategic takeaway is to recalibrate their understanding of market signals. While the dramatic daily price swings capture our attention, the most powerful long-term indicators are often found in these seemingly mundane industrial developments. The construction of a new mint is a far more potent bullish signal than a 7% price gain in a single day. It represents a tangible, long-term commitment of capital based on a deep analysis of future trends. It tells us that the major players in the industry are preparing for a world where demand for physical silver is not a passing fad, but a permanent feature of the financial landscape. This new reality underscores the wisdom of timeless investment principles like dollar-cost averaging. In a market that has demonstrated its capacity for extreme volatility, trying to time the absolute bottom or top is a fool's errand. A disciplined approach of making regular purchases over time remains the most prudent strategy. The recent pullback from over $50 an ounce, while sharp, should be viewed in this new context. It is a buying opportunity within a market that is simultaneously demonstrating its long-term structural strength. Each dip is a chance to accumulate within a system that is actively becoming more robust and efficient. The concept of agility, therefore, applies as much to the investor as it does to the refiner. Understanding the evolving market structure is key. The existence of this new mint, for example, makes holding constitutional silver even more compelling. While its primary value lies in its historical significance and potential for use in barter, its underlying silver content now has a more efficient and reliable pathway back into the mainstream bullion market, should the need arise. This enhances its liquidity and provides a stronger floor for its value, making it a more versatile and secure asset for the modern stacker. Ultimately, the opening of the Dillon Gage mint is the first major act in the market's reaction and adaptation to the new silver bull run. It is a testament to the free market's ability to identify a problem, a severe logistical bottleneck, and engineer a sophisticated solution. This development provides a crucial lesson in looking beyond the ticker tape to understand the real physical mechanics of the market. The future of silver will not be determined by algorithms trading paper derivatives alone, but by the tangible capacity of refineries and mints to meet the enduring human desire for a real, hard asset in uncertain times. This move should also serve as a source of encouragement for stackers who have felt discouraged by the recent volatility and market frictions. The system is adapting. The challenges of a glut of sell-side silver overwhelming refineries were a temporary growing pain of a market rapidly repricing and resizing itself. This new facility is the remedy. It validates the core thesis of silver investing, that as demand grows, the industry will evolve to meet it. It is a sign of health, not weakness, and it paves the way for a more stable and ultimately higher value future for the metal. We must also consider the geopolitical dimension. In a world increasingly fractured by economic competition and strategic tensions, the security of supply chains has become paramount. A state-of-the-art refining and minting operation within the United States adds a significant degree of resilience to the domestic precious metals market. It reduces reliance on foreign entities and ensures that the nation has the capacity to refine and produce its own monetary and industrial silver, a capability of immense strategic importance in an unstable world. This is an investment in financial sovereignty. The lesson for the future is that infrastructure is destiny. A market's potential is ultimately limited by its physical and logistical framework. By expanding this framework, Dillon Gage is not just preparing for the next wave of demand, it is actively enabling it. A more liquid, efficient, and trustworthy market encourages greater participation, from the smallest retail stacker to the largest institutional funds. This facility acts as a magnet for new capital, providing the assurance that the physical delivery and conversion mechanisms are robust and scalable, ready for whatever the future holds. Therefore, as we look ahead, the prediction is not for a straight, uninterrupted line upwards in price. Instead, we should anticipate a market that is healthier, deeper, and better equipped to handle shocks. The extreme premiums and supply shortages of the past may be relegated to history, replaced by a more mature and liquid trading environment. This maturity will lay the groundwork for silver to eventually retest its inflation-adjusted highs, not in a frantic, short-lived spike, but as a sustainable valuation supported by a world-class industrial and investment infrastructure. The quiet work in Dallas is the blueprint for that future. The narrative of silver is shifting from one of speculative frenzy to one of strategic necessity. The investor appetite is no longer just a reaction to transient inflation fears, but a more permanent allocation toward tangible assets in the face of deep, structural uncertainties in the global financial system. Companies like Dillon Gage see this tectonic shift and are positioning themselves accordingly. They are not just meeting demand. They are anticipating the evolution of money itself and building the physical architecture that will be required in a new economic era. This expansion also highlights the dynamic nature of the American economy. While much of the narrative focuses on deindustrialization, here we have a clear example of sophisticated, technology-driven industrial capacity being built on U.S. soil. It is a story of innovation, investment, and adaptation that runs counter to the prevailing pessimism. This facility will create skilled jobs and serve as a vital hub in the North American precious metals ecosystem, demonstrating the enduring power of enterprise to solve complex problems and build real, lasting value. The impact on investor psychology should not be underestimated. The knowledge that a major refiner can absorb a massive influx of sold-back silver provides a psychological safety net. It reduces the fear that if one needs to liquidate their holdings, the market will seize up. This confidence is crucial for long-term holding. It transforms silver from a potentially illiquid collectible into a more readily transferable form of wealth, reinforcing its role as a reliable store of value that can be accessed when needed, which is the ultimate purpose of a safe haven asset. In conclusion, the story of this new mint is the most important silver story of 2025. It is a microcosm of a much larger trend, the professionalization and industrialization of the retail precious metals space. The market is growing up, adapting to its newfound prominence with the seriousness it deserves. For those of us who believe in the long-term value of silver, this is not the end of the bull run. It is the end of the beginning, the moment where the market builds the solid foundation required for the next, more sustainable phase of its historic ascent. The final takeaway for every investor is to maintain a dual focus. Watch the price, but also watch the plumbing. Understand that for every headline-grabbing price move, there is a quieter, more significant development happening in the underlying infrastructure of the market. The expansion by Dillon Gage is a clear and unambiguous signal that the smart money is not just betting on a higher silver price, but is investing in the very systems that will make a higher and more stable price a long-term reality. The future is being forged, quite literally, in a Dallas mint. This strategic move is a powerful indicator of where the entire precious metals industry is heading. We can anticipate other major players will follow suit, leading to a wave of investment in modernizing and expanding refining and minting capabilities globally. This competitive response will further enhance market efficiency, ultimately benefiting the end investor by creating a more resilient, transparent, and liquid global marketplace for physical bullion. What starts in Dallas will not stay in Dallas. It will set a new industry standard. The psychological barrier of previous nominal highs has been broken. Now the industry is breaking the physical barriers that prevented a smooth functioning market at these new elevated levels. This is how a true bull market builds a lasting foundation. It's not just about rising prices driven by sentiment, but about the corresponding growth in physical infrastructure that can support those prices. This ensures that the rally is not a mere bubble, but a fundamental revaluation backed by real-world industrial capacity and investment. Therefore, the path forward requires patience and perspective. The market may churn and consolidate as it digests the recent gains and adapts to this new supply-side reality. But the underlying signal is one of immense strength. The agility being built into the system today will allow it to handle the far greater volumes that will accompany the next major leg up in this secular bull market for tangible assets. The quiet hum of machinery at the new Dallas Mint is a far more powerful bullish chorus than the frantic shouts of day traders.